Behind the polished facades of seemingly legitimate businesses lies a covert world where money changes hands in the shadows. Hello and welcome to the Riching Your Life. Money laundering is the process of illegally hiding the origin of money obtained from illicit activities by making it look like it came from a legitimate source. It is a crime that enables other crimes and harms society and the economy. Today, we're diving deep into the underbelly of finance to expose the 15 typical industries intricately associated with the intricate art of money laundering. Before that, don't forget to hit that subscribe button and ring the notification bell to join us on more fascinating journeys with us. Let's get started. Number 1. Real estate. Real estate is a common industry for money laundering, as it allows criminals to buy and sell properties with large amounts of cash, often using shell companies or intermediaries to hide their identity and the source of the funds. Number 2. Casinos and gambling. Casinos and gambling, a magnet for money laundering, thrive on abundant cash transactions, lax regulation, and anonymity. Criminals exploit these factors, funneling illicit funds through gameplay, chip purchases, or ticket transactions. They effortlessly convert tainted money into clean currency by cashing out winnings or exchanging chips, leaving a trail of financial opacity. Number 3. Art and antiques. Art and antiques, with their high value, subjective pricing, and low transparency, become a magnet for money laundering. Criminals exploit auctions, galleries, dealers, and private collectors to layer and integrate illicit funds. Also, these portable, durable treasures offer a discreet wealth storage option, allowing the shadowy world of finance to flourish behind the veneer of artistic elegance. Number 4. Jewelry and precious metals. Jewelry and precious metals, with their high value, demand, and low traceability, become a haven for money launderers. Criminals leverage these assets to obscure illicit funds, purchasing with cash, employing shell companies, or using intermediaries. Subsequently, they can convert or exchange them for clean money, enabling a seamless transition of funds or discrete payment for services and goods. Number 5. Car dealerships. Car dealerships, with their substantial cash transactions, fierce competition, and limited oversight, can inadvertently become hubs for money laundering. Criminals exploit these conditions, purchasing vehicles with cash and employing shell companies or intermediaries. The acquired cars can then be sold, repurposed, or utilized as a means to pay for various services or goods, making car dealerships an unsuspecting ally in the world of illicit financial activities. Number 6. Hotels and restaurants. In the world of money laundering, hotels and restaurants stand as potential hotspots. With their abundant cash transactions, frequent customer turnover, and minimal verification, these establishments become ripe for exploitation. Criminals leverage them to launder money by paying in cash, utilizing shell companies, or employing intermediaries. The funds seamlessly integrate into the legitimate flow, allowing illicit gains to be utilized for personal benefits or exchanged for various services and goods. Number 7. Travel agencies and airlines. Within the realm of money laundering, travel agencies and airlines emerge as unsuspecting conduits. With mobility, anonymity, and limited scrutiny, these industries become fertile ground for criminals. Cash transactions, shell companies, and intermediaries provide discrete avenues for laundering money, be it through ticket purchases or packages. The funds, now obscured, fuel illicit travels or seamlessly infiltrate the market to procure goods and services. Number 8. Law firms and accounting firms. Law and accounting firms, trusted for their professionalism, become unexpected players in money laundering. Offering a cloak of legitimacy, these entities aid criminals in layering and integrating illicit funds through shell companies, trusts, and offshore accounts. From legal advice to facilitating transactions, they become unwitting accomplices in the covert world of financial deception. Number 9. Trust and company service providers. Trust and company service providers, with their formidable flexibility, intricate complexity, and limited transparency, become conduits for money laundering. Criminals exploit them to layer and integrate illicit funds through the creation and management of shell entities, trusts, foundations, and offshore accounts. These entities also facilitate criminal activities by offering administrative, fiduciary, and nominee services. Number 10. Virtual assets and virtual asset service providers. Virtual assets and service providers, with their innovative nature, anonymity, and minimal regulation, become ripe grounds for money laundering. Criminals exploit these channels to place, layer, and integrate funds through buying, selling, exchanging, and transferring cryptocurrencies, tokens, or digital assets. Also, virtual assets offer decentralized, encrypted, and easily accessible storage for ill-gotten gains. Number 11. Money or value transfer services. Money transfer services, a convenient and swift industry, become unwitting accomplices in money laundering. With minimal identification requirements, criminals exploit these services to place, layer, and integrate illicit funds. Whether through cash, prepaid cards, mobile money, or remittances, they seamlessly move money across borders, leveraging the global reach of these widely available platforms. Number 12. The banking sector. In the intricate web of money laundering, the banking sector emerges as a key player. With its unparalleled access, diverse options, and low suspicion levels, criminals deftly utilize it to place, layer, and integrate their illicit funds. From account operations to fund transfers, it serves as a conduit for financial subterfuge, enabling access to a range of services like loans, mortgages, and investments. Number 13. The payment services sector. Within the payment services sector, a breeding ground for money laundering emerges. With its functional prowess, efficiency, and minimal traceability, criminals seamlessly infiltrate by making or receiving payments, credit cards, debit cards, and online and mobile transactions. This sector becomes a clandestine tool for layering and integrating illicit funds into various services and goods. Number 14. The securities sector. In the world of money laundering, the securities sector serves as a clandestine ally. With its potent blend of high liquidity, volatility, and minimal disclosure, criminals exploit it for placing, layering, and integrating illicit funds. Through strategic stock, bond, or option transactions, they generate income, concealing their financial misdeeds in the complex dynamics of market fluctuations. Number 15. The life insurance sector. The life insurance sector, often perceived as a safeguard, becomes a covert avenue for money laundering due to its robust protection, flexibility, and low scrutiny. Criminals strategically employ this sector to place, layer, and integrate illicit funds. Whether through buying or selling policies like term, whole, or universal life, or storing wealth via cash value, surrender value, or death benefits, life insurance emerges as an unexpected player in the complex game of financial deception. These are just some of the typical industries associated with money laundering, but there are many more. We hope you enjoyed this video and learned something new. If you did, please give us a thumbs up and subscribe to our channel for more videos like this. Also, don't forget to hit the bell icon to get notified whenever we upload a new video. Thanks for watching.